Most traders lose because they don't actually have a clear understanding of what liquidity is in the markets and why banks actually use it to their advantage. Well, in today's video, I'm going to explain exactly what buy side and sell side actually are and why they are so important in the market, along with some key tools that you need to implement with buy side and sell side to have those sniper entries. And let alone, I'll give you a little bonus at the end towards the video of my A+ strategy that I trade every single day during New York Open. And guys, it has yet to ever fail me. So stay tuned to the end and I'm sure you're gonna love this video. So let's get right into it. Just before we get into the charts, I'll just give you a brief example of what buy side is along with what sell side liquidity is. Now, buy side always happens from the highs getting swept. Sell side is always from the lows that are getting swept. And to put it in the most simplest terms, banks use this to their advantage because say, for example, you take a short position over here. Where are you going to put your stop loss? Obviously, it's going to be at the highs, which is going to be in this zone, which is saying there's going to be a lot of liquidity in this area. So when price comes in, taps into the zone, we are generating all of this buy side liquidity to then get pushed lower. And banks use this to their advantage. If a bank enters over here for a short position, what's going to happen? They're entering with trillions of dollars. They're automatically going to dump the stock. So what they do to get an exact precise entry is they wait till a buy side or a sell side liquidity gets swept. There's already trillions of dollars in this zone. So them coming into the market, they have a cushion that's going to be stopping them from pretty much blowing the market out. So they can get a much cheaper price and they're not going to get a slippage is what we call it in the trading world. So it's as simple as that. Let's hop into the charts. When it comes to marking out the buy side and sell side, you always want to look at major highs. So for example, over here, we can see we have a very strong downtrend. Now, what's an obvious peak before we had another drop? It would be right over here. So we marked this out as a buy side liquidity. What do? Came into this area. Now, a bunch of liquidity. All the people that took shorts over here put their stop loss up here. If they were too greedy and didn't get out, well, now they got stopped out and a bunch of orders got filled to then push lower because markets always want to catch all the liquidity and the money in the market. This is another buy side liquidity. Why? Because it's just simply an obvious high. What's over here? This is an obvious low. This is our sell side liquidity. What do? Swept it, pushed higher. Buy side liquidity, swept it, pushed lower. Buy side liquidity, swept it, pushed lower. What do we do over here? Sell side liquidity. I'm sure you can finish the sentence now. Swept it, pushed higher. Guys, it's honestly as simple as that. Now, something that you have to pair with buy side and sell side are fair value gaps. Guys, fair value gaps are a key. It's like the golden apple. Buy side and fair value gaps, putting them together, you are going to get sniper entries. And guys, you're gonna increase your win rate by like 100%. Look at this. You always can see that buy side and fair value gaps always match each other because they both have the same reasoning. Buy side, bunch of liquidity. Fair value gaps, bunch of unfilled orders. So pairing them together, they are going to always work. Now, here you go. Again, sell side liquidity. And guys, this is not even like pre-recorded. Like I'm literally just marking these all out. It just goes to show that fair value gap and sell side liquidity or buy side liquidity are insanely powerful. I'm like dying to mark these out over here. As you can see, tap in, push. So all the time when you're marking out your sells and your buy sides, always try to make sure there's a fair value gap in that zone. Right again, here we go. What else do we see? Sell side liquidity. And what do we have as well? We have a fair value gap. Another thing, if you don't have a fair value gap, you can always use SMTs. Now, SMT, that works as well. And SMTs, of course, you want to use with NASDAQ and the S&P 500. Why? Because they are two correlated assets. So if you don't have a fair value gap, use an SMT. But guys, trust me, if you want to use buy side and sell side as entry points for liquidity sweeps, trust me, guys, you want to pair it with either these two models, fair value gap or an SMT. Trust me, you are going to become very powerful, and you're going to see that these entries are going to be sniper, and like 90% of the time you are going to get amazing reversals. So I think you guys waited long enough. You deserved it. We're going to jump into the strategy video right now. If you guys weren't able to tell, yes, the strategy has a 1 hour buy side or sell side with a fair value gap. So let's mark it out. Buy side liquidity, bang, 1 hour time frame. Now, what do we have in that buy side liquidity? We have a fair value gap. So let's mark it out as well. Now, of course, if we do have an SMT with NAS and ES, that is an added confluence. Beautiful. Now, from the 1 hour time frame, we know where price is going to go. We know price is going down. So we hop down to the lower time frame, try to find our entry. Let's go to the 1 minute time frame. Do we have anything on the 1 minute? Now we're looking simply for a sweep. Do we have anything? No. Now let's go on the 2 minute. Let's see, going a bit forward, a bit forward. What do we have? Beautiful. We have a manipulation leg, also known as a buy side liquidity. I like to call it manipulation leg. Call it the way you would like. Manipulation leg. What do we have down here? Well, we have a beautiful market structure shift. Mark that out as well. And what do we have in the zone? We also have a inversion fair value gap. So what are we going to do? The second we make a full body close right over here, we're going to take our entry. Stop loss is going to go right at these highs. Take a standard deviation from the highs right to the break of the inversion fair value gap. And you can target either a -1 or a -2. In my case, I always look for -1s and just get a quick 1-to-1 R. It's as simple as that. Why? Because -1s are very key zones of rejection. And of course, you can always take partials at that -1 and target for that -2. Guys, yes, you can call me whatever you want. I target always -1s, 1-to-1 R, in and out, bang, got my profit for the day, I'm out. At the end of the day, you can always target -2s and get that bigger profit. So guys, repeating it, 1 hour buy side liquidity inside of that fair value gap. If you have an SMT, beautiful. If you don't have a fair value gap, then buy side SMT, or again, buy side fair value gap. You have the SMT, add it as an extra confluence. Then drop down to the 2 minute time frame. In this case, look for a manipulation leg or just sweeping out the highs. Mark out that market structure shift right at the lows, which is confirming that we are changing the trend direction, and the inversion fair value gap as your entry point. Standard deviation, if you want to use it, from the highs right to the break of the inversion fair value gap, target -1 or a -2. It's as simple as it gets. So guys, that is going to be the end of the video. I hope you enjoyed it. And if you are new into the 2026 trading world, I wish you all the best. And guys, if you do need any help and want one-on-one help, I have a free trial. I'm not charging you. I have a free trial down below. Go check that out. And I hope you have a beautiful rest of your day. Peace.